Well, today is a good day. Today is a good day because we look at Supreme, which is a stock that I own, and the stock is absolutely flying today. But also it's a good reflection point for two reasons, and I'm going to go through these 2 points, then I'll get on to Supreme, which is absolutely smashing it today. So first of all, it's good to step back and reflect on what a year it's been. This year has been really good. It's been a really good year in the stock market, and things have started getting or got back to normality. We've started to have a steady stock market that's going up, and we've gone back to making money. And it's so different from where we were only a year and a half ago. From that back end of 2021 into 2022, what an awful stock market it was. The stocks were going down, stocks were getting killed, interest rates were going up, inflation was going up. Freight costs were going miles up crazy. Ukraine-Russia situation causes so much pain in the stock market, and for me personally, it wasn't a fun time. You know, coming on this YouTube scene and making videos when you are having so many stocks that were getting killed, it's not fun. But what can you do about it? Are you going to sit there and cry and sulk or just, you know, disappear off the scene? Or are you going to adapt? Are you going to adapt to the situation and go, okay, it's not good. Let's see, is there things that I need to change here? Is there different stocks that I need to buy? Is there stocks that I need to average in on? And it's very good from where we were a year and a half ago when it was just so painful out there. You know, stocks that I own like Beyond Meat, you know, absolutely getting crushed. A stock that I own like Skills, for example, you know, absolutely getting crushed out there. And it was just so painful to come on here and make videos. And then from that stock market that was the worst stock market that we've had for 15 years, I think the first 6 months of 2022, it was the worst stock market for over 40 years. And it was painful, but we adjusted. We changed the game plan. We reassessed what needs to go on. What stocks are we buying? Is there any new stocks we need to buy in the stock market crash? And we adapt and we see if we can move back into a positive direction. And it's good to see that in 2023, we're there. We're back where stocks that we're buying are going up. We're making money. We're making good decisions again. And it's really good to see. You know, the likes of SoFi, buying SoFi, and, you know, that obviously went on to be already pushing into that 100% return club. DK, you know, a stock that I bought and it was getting punished and going, do I need to still buy this stock? And I bought it and bought it and bought it. And conviction, research, time, every night looking in and going, what if this happens? What if this happens? And then, you know, you get the rewards, which is great. Hims and Hers, same again. You know, a stock that was down at $3 going, is there something really wrong with this? And you do the research, you keep reading, no, I believe in it, you buy it, you get the return, another 100% club. The new stocks that you add in, you look at the likes of Alphaway, for example, a stock that, once again, you know, you're doing the research on and you get the rewards from it. Moonpig, same again, a stock that's absolutely rallied since I bought it. Tesla, I bought the stock, obviously it's one that I sold, but unbelievable rally from Tesla. Celsius, same again, one that I've sold, but once again, buying in that dip, having the confidence, getting the rewards. Revolution Beauty, once again, doing the research, going, looking at the situation, can I make money from this situation in 2021, in 2022, and making the rewards from that. And once again, a new stock that's on the portfolio, Supreme, you know, a new stock that we've been adding into the portfolio in the last couple of weeks. And once again, you know, you're adapting to the situation, looking for the opportunities, and it's just it's such a good feeling once again to go from where we were a year and a half ago, where there was so many stocks getting devastated, stocks that I own that get devastated, and it wasn't fun to go through, but you have to go through them times as an investor. And the big thing is, how do you come out the other side when you go through those situations? And you will have those situations, and you will have stocks that get beaten up, you will have stocks that won't make it back through those situations. It's about how you respond and how you adapt, how you change your portfolio, what you buy, what you don't buy, the new stocks you add in, the opportunities you add in. And it's good to be from where we were a year ago into this position where everything is just looking so much better. So I just wanted to start by saying that. The next one is Supreme anyway. So Supreme having a fantastic day. The stock was actually up 20%. It's only up 8% right now. And I'm going to say right now, I'm actually actively buying this stock today. You know, it's very easy in 2021 to be looking at a lot of these stocks that are down a lot and thinking, oh, I'm going to buy that because it's going down so it's cheaper. It's a change in mindset when you're now having stocks that are going up and going, even though this stock is up, I'm still buying more and more and more. And that's what I'm doing with Supreme. Even though the stock was up 20% today, or is up 8% at the moment, I'm still buying. I've bought more shares today because I'm looking at the company here, and even though I was up on the position, this company is financially performing a lot better than what I was thinking. So the upside is going up more and more. So even though the stock is up 8% today, or was up 20% today, I'm looking at this stock thinking, I'm going to collect a really lovely dividend yield, and I'm also going to collect a lot of share price appreciation. Now the fact the company's even outperforming what I thought they were going to do, the upside's getting higher and higher. So, you know what, I might be averaging up 8%, but if my upside that I'm looking at today is even higher now, keep buying it. Keep buying the stocks that are fundamentally performing. And it's the old classic saying of sort of like, you want to be, you know, watering the flowers, not watering the weeds. And that is exactly what it is with this stock. I want to keep, if this stock's going to still perform and it's financially performing, I want to keep buying. So you guys on the Patreon, if you want to join, links in the description. That's where you get my live buy and sell alerts. You guys on the Patreon obviously already know. I did on their post, I'm going to buy the stock, and I doubled the shares that I have. There was also another buy, which I've blanked out here, because obviously you guys on the Patreon, you get to keep that one secret until we reveal it towards the end of the month. But I thought I'm going to buy some more shares, because I'm looking at these earnings and I'm thinking, these are even better than what I was hoping for. The upside's even more, so I'm just going to buy more of these shares. And then when you look at the earnings, they're absolutely fantastic. I won't do a full earnings review here, but nice and brief as you look here. Robust trading across financial year 23 and particularly strong second half, underpinned by an outstanding performance from the vaping category and earnings enhanced acquisitions. Record level of cash generated, very positive outlook, and supported by significant profit upgrade for financial year 24. Revenue growth of 19%, half which was driven by earnings enhancing acquisitions and the remainder of strong organic growth. And if you look here, the group paid an interim dividend of 0.8%, which together with the final dividends for the year to 3 pence per share, this is even higher. You know, this is a great combination where you got a company that's growing profit, growing revenue, and that's also leading now to a dividend growth company. And the dividend is now higher than what analysts were forecasting for them to pay out, which is fantastic. So you got that combination of growth, revenue, share price appreciation, the dividends growing as well. The group has made a very, very solid start to financial year 24. The core business of the financial year 23 acquisitions are all performing strongly, and as a result, the board expects adjusted EBITDA to be ahead of the latest expectations by at least 1 million. In addition, the group now expects to generate a further 25 to 30 million of revenue and around 2 million incremental adjusted EBITDA in the financial year 24 in respect of a master distributor appointment with the UK's leading vaping brands, Elf Bar and Lost Mary. So these guys, obviously a distributor, obviously they sell their own vapes with 88 Vape, but also distributing now other brands as well, which is fantastic. As a result, the board now anticipates that trading in financial year 24 will be significant ahead of consensus. This is absolutely amazing, because I was looking at, you know, this company's, by the way, this company's 12 times earnings. 12 times earnings, just remember that. You look at the growth here, absolutely fabulous growth. The company aims to grow 10% a year. 12 times earnings for a 10% a year growth company. That's absolutely ridiculous. But I was looking here, and I was looking at the analysts that are expecting the profitability start dropping down. And I was like, I don't know if that's going to happen. I can only see profitability maintaining, especially with some of the costs coming down. And then the profitability actually start moving back into a positive direction as well. And that's what's going to happen. And these on Super Wall Street haven't been updated, as you see here, since the April 17th, 2023. So with them saying they're going to consensus of even more EBITDA, I'm expecting even more of that to go to the profit. And this company is, you got revenue growth, you got profit growth, the valuation is going to drop. And like I said, on a dividend point of view, because, and by the way, on the financial health point of view, the company here, no debt on there. Well, it does have a little bit of debt there. Nothing major. You know, absolutely fantastic balance sheet. Currently sits on 5.4 million in cash. Obviously, even more cash after the profit they've just generated there. But they sit on, you know, really good amounts of cash, good balance sheet. They can then pay that into the dividend. And you can see here, the dividend at the moment is forecast to be 2.3%, but they're actually only expected to pay 2.5 pence. But actually, as we see here, they're actually going to be paying 3 pence. So the company itself is hiking up that dividend. The only reason why this is so high is because they actually did an extra payout here, but the dividend is now going to be higher than what analysts are forecasting and should continue to grow as well going forward. And always a really positive sign is, you know, when you look at the insider buying, and you can see here the chairman of the board was picking the shares up at £1.03. You got as well the CFO. The CFO was buying a good chunk of shares on the 12th of May, you know, only nearly, you know, a month and a half away from these results. There's no wonder the CFO was seeing the numbers coming in and going, look at these numbers and look at our share price. Our share price that's going to be paying a good dividend yield that's going to grow, 12 times earnings or 13 after today. And look at the growth that we're putting in. No wonder the CFO went, you know what, I'm going to buy some shares. And that's always why, insider buying is normally a good sign that they are seeing something in there that is worth, looking at. And I look at it today, and after all these results and all these numbers and the company's health, and it's it's only up 8%. Like when it was up 20%, I was like, fair enough. I was expecting 20 to 30% jump in the stock today, and it did happen, and then it gave it all back, and that's why I was like, right, if you're only up 8% and you've given these results, I'm buying more. The upside for me is now even higher than where it was previously. So with a fundamentally good company, I'm happy to keep averaging up on that one, and that's what I'm doing at the moment. So yeah, overall, I just wanted to make this video because I think it was a good point to reflect on what has been a good year after what was a terrible year. So that's been really good, and also why I still want to buy a stock even if it's going up, and also just a recap of Supreme. Obviously absolutely amazing numbers from these guys today. So hope you enjoyed the video as always, guys. If you could, smash the like button. If you're new, subscribe, and also congratulations to any of you guys that are Supreme shareholders. I'll see you in a bit.